The loneliest number in math is a numerator without a denominator. The price alone isn't the only story, it's the wallet that it cuts into. The disposable share, the share of disposable income per capita, eroded by the rise in price, is starting to get to a point where I think we're going to see some pump price pain deliver some demand response. It is not something that is formulaic. You don't know when it is. Disposable income is up a lot. Some of the stimulus dollars are still in pockets, but we're now rising well above 3%. Gasoline share of DPI per capita. When you get 3.5%, 4% in the history, recent history, the 20 teens, we started to see demand retracement year on year in monthly data. So I think we're likely, if we keep rising the way we're going, we're going to get there, but not right away. It's probably the next vacation that gets canceled, not this one.
So what's interesting you bring that up, because many of the surveys that we've been seeing, right, and surveys tell us so much. There's always some kind of a sampling error, some statistical variance with regard to how these data are collected. It indicates that people are not really willing to give up that vacation or those travel plans or that road trip right now. So what exactly would they spend less on, in your mind, if they were going to continue to spend on things like driving and travel and everything else, especially in the next 2 to 3 months?
Well, we don't know for sure, but we can expect that probably a ramp in credit card debt, which we're starting to see, as you mentioned, starts to show that they're not making the compromises yet. They'll make them eventually. Also part of the lagging dynamics here. You know, in past run-ups, what we saw was that the energy prices that ran when a lot of other prices were relatively flat. Now we're looking at a CPI rising. Yes, energy is a big component year on year and in many months, very significant. But other parts of the basket are going up at the same time. So I think the competition may be a bit more fierce for some of those other consumer spending areas. Debt racks, and then the capitulation comes. But again, not right away.
So, Kevin, the Biden administration is understandably feeling the heat from this. This is one of the biggest topics of discussion right now among the American public about our economy and where it's headed. What exactly can the administration do, if anything, to bring down those gasoline prices? I know that in my state, the state has already suspended gasoline taxes at the state level. What else can be done?
Well, you know, when you start to suspend taxes, or for that matter, to give subsidies or incentives for demand, you prevent the market from balancing, but you also prevent the voters from freaking out. And so a lot of what may make the most economic sense would be tone-deaf politics. Some of what you're going to see may not make much economic sense because politics is leading the charge. A lot of blaming and blame shifting is some of the easiest response the White House can give. Addressing the fundamentals is quite hard. A heroic strategic reserve draw has done nothing that the consumer can see. It may have capped further rises to the upside. We've risen nonetheless. At this point, you can see that there's a, let's call it, and this is an informal term for it, a Mojo play date coming later this month, potentially, a meeting between Crown Prince Mohammed bin Salman and President Biden. That would seem to reflect a fundamental change in geopolitics that could filter back into energy and maybe even the gallon at the pump.